Hey, Rebel Bankers, welcome back to the Real Estate Money School. I'm your host, Chris Noggle, and I've got a special guest. We were talking a little bit offline about the markets, about real estate, what we're doing, how we're doing it, and we're going to go over all this stuff today. But he's got a very unique touch and a very unique strategy on what he's doing and how he's doing it. And he was telling me about one of his 11-unit deals that he did, and you guys got to hear about this one. So Martin Perdomo, that's who's going to be on, and his company's name, he's got a couple companies, but Elite Strategist is his one company, and his other company is Premier Rich Capital. It's a syndication company, but not like all the other syndications that you've seen. So we're going to talk about that. But before we get into Martin and his story and how he's doing it, I want to talk about all of you. I want to talk about your journey to becoming a Rebel Banker. So many of you know the strategy, know the formula to success, but yet you don't take action on it. And I'll never understand that. And Martin's going to talk a lot about mindset. And I think that's a big part of it. You know, we've been conditioned that we need to get educated, and everybody's pretty good about that. We read books, we watch podcasts, we absorb information through different mentors, coaches, trainings, and YouTube. YouTube's great. But so few of us actually take action, why would you take and get all this knowledge and not take action? That's the thing I always have to ask. And that's the thing I'm asking you. On your journey to being a Rebel Banker, you have to take action. So I'm going to give you something to take action on right now. I'm going to give you my books for free. So Mapping Out the Millionaire Mystery, and I'm going to give you the Private Money Guide. So you can get each one of these books for free. Just pay the shipping to get them to your place. So that's me taking action for you. Your action is, will you click the link? In the description of this podcast, you'll see there's a link. You can click it, and it will give you both of those books. Not just taking action to get the books, but secondarily taking action on the information in the books. That's what's going to change your life. That's going to change your money game, and it's going to teach you how money works. So that's your challenge. How many of you are going to take action? Martin, welcome to the show.
Hey, Chris, thank you for having me. It's an honor and pleasure. Thank you very much. I really appreciate that.
Absolutely. Well, let's dive right in. Tell everybody a little bit about what your business is, Elite Strategist and Premier Rich Capital. Tell us about what those companies do.
So Elite Sales Consulting Group is the name of the company. I go by the Elite Strategist. I consider myself to be a strategist. I'm a mindset guy. Like I told you, I'm a certified hypnotherapist. So I do certified coach. So I do a lot of mindset stuff. So that's my consulting company. So I do all of my educational platform through there and coaching through that company. And then Premier Rich Capital is my syndication company. My partner, Dr. Danielle van der Linden, and myself, we are the co-founders of that company. And we buy real estate using that company with OPM, other people's money, right, with investors. And we pride ourselves in giving our investors above average returns.
So kind of dissect, a lot of the listeners, they keep hearing this syndication thing, but give them a little deeper dive into what actually is syndication, how does it work, and how are you using it for the property types you're buying, and what are those properties?
So basically, syndication is we get a group of investors, private investors, right, that instead of putting their money in a different vehicle like the stock market, they put it into real estate. And the reason I love real estate and my partner and I love real estate is because real estate, I had a mentor once, I'll share this. I had a mentor once in my town here in Stroudsburg, Pennsylvania. And she is the wealthiest, one of the wealthiest families in this town. And she owns a lot of real estate. And one day I take her out to lunch and I say, hey, Kathy, why real estate, right? Why not the stock market? Why real estate? And she said, well, Martin, I invest in the stock market, but my preference is real estate. And the reason real estate is because real estate is a real asset that I can touch and I can knock on the door and get an exchange of money for something I own. Versus the stock market is kind of out of my control. It's not something that she so much can control, although she does invest in it, but that's why her preference in real estate is. So for me, I learned that from her, and that's why I love real estate, because it's a real asset, right? Real estate tends to be inflation protected, right? With rents, when our insurance goes up, this, Chris, if our insurance goes up, our taxes go up, guess what? Our tenants are paying, right? So we mostly buy and hold. I do a couple of flips a year as well. My wife and I we do a couple flips a year, and we specialize in the BRRRR strategy, right? So basically, syndication is we get people to give us, not to give us, but to invest in a particular asset. We pride ourselves on giving them above average returns. So on average, we give them a 15% annual average return. So basically, over the 5 years that we own the asset, we have a clear business plan, a clear exit strategy. So we're going to buy this asset that's underperforming. Most of the time is mom and pop, undermanaged, poorly managed property, which we take in turn, buy it, take it over. We reposition the asset, we fix it, we clean it up, and we raise the rents. And in multifamily, as you know, Chris, maybe your listeners are aware, maybe they're not, but in multifamily, you control for the most part, you control the value of the asset based on how good of a business person you are. So the better we are at managing the business, increasing the rents and decreasing the expenses, that determines the value of the asset. That's why I love multifamily, because we have a sense of control. It's not like residential, where residential it's all based on the comps, right? The comparable homes. When I'm flipping a single family, it's based on the comparable homes of the neighbors up the road and all of that stuff. Not in residential, not in commercial. I mean, not in multifamily. That's why we love multifamily. So we investors come in, they give us, let's say, minimum investment with us is $50,000. Now you're on the operating agreement. You are part owner. You are a shareholder of this asset, and we pay quarterly distributions. It's actually a pretty neat thing. If anyone wants to, just visit our website and check it out. Anyone wants to know how that works out.
Yeah, I think syndication is a great model. It's become more and more popular, and I like the simple fact that you're using it on the BRRRR strategy. So talk a little bit about, walk us through a deal. Like, how do you find the deal, and then what do you do once you get the deal purchased and under your control? I mean, how do you increase the rent rolls, the values, and then what is your next step? What is your strategy on that?
Okay. So there's a lot to unpack there. So I'm gonna share an actual real deal that we have going right now, that we actually just did the inspection on Saturday. So
is this the one we were talking about?
The one we were talking
Awesome.
about. Yeah.
I was hoping we were going there.
Yeah. So we have an 11 unit on the contract. This happened to be a deal that has been on the market for a year, 400 and something days. I don't know, a year and a half or something like that. The minute it came on the market, I saw it on the MLS. This one's on the MLS. And I called my broker and I say, Rob, I want to see this deal. Blah, blah. Either way, we went, I saw that, I looked at the asset. I put an offer immediately. And we were going through a tax reassessment here. So here's where the due diligence comes into play. Doing your due diligence. We were in the middle of the due diligence, and we were going through a tax assessment in our town. And what I found was that a lot of the older properties were getting killed in terms of taxes. I can't do a deal if I don't know the numbers. It's all about the numbers, Chris, right?
It's always.
So we did the numbers. There was too much of an unknown. So we said, we're going to wait on this one. Let's wait. It's not for us. We can't go into a deal. We got to protect our investors. We got to protect our own money. We're not going to go in a deal and lose money. So taxes are taxes. You can't avoid that, right? So we waited. We came back to the deal. We got in on this deal. This deal is an estate sale. It happens to be an estate sale. It's an older lady, poorly managed. The average increase on the rent is going to be about $250 per unit. That's a beautiful thing. It's not that big. It's only 11 units. We're buying it for $410,000, which is $37,000 per door. That is, and we have one.
That's
vacant.
like 2009 levels, just so everybody knows. That's that's what I was buying multifamily units for in 2009, 10, 11. Like, my target was 40,000 and less a door. You can't touch that now. What market is this in?
This is in the Poconos, so in the Pocono market
Poconos
in Pennsylvania. And so there's upside and downside, because we have tremendous job opportunities. The challenge is that it's a very resort-y area, so we have a lot of resorts, and we both know that the resorts are taking a hit with everything going on right now, right? However, we also have Amazon. So two drivers. So your listeners that don't know, two things that drive real estate in multifamily is population growth and employment. We have both because we're 65 miles away from New York City. What are happening to people from New York? They're just leaving by the mass. I mean, people are leaving New York, so they're coming west. A lot of them are coming to the Poconos. So just to give you an idea, right now, currently, again, in our due diligence phase, there's only 16 apartments on the MLS for rent in all of Monroe County as we speak. So, I mean, this is such a sweet opportunity. We're able to take this asset. We just actually spoke to our property manager that we're going to put into play here. We're going to take this asset immediately day one. We're going to increase the rent by $75, and we're going to phase them in. And then whoever stays, and whoever doesn't, it's fine. You know, there's a big demand. We turn the units. The BRRRR strategy. So the particularly with this particular deal, what we're going to be doing is, because there's so much meat on the bone, Chris, we're going to take this asset. We're projecting that within 18 to 24 months, we're going to buy it at 410. We are projecting that this asset is going to be worth about 675 in 18 months. Remember, we're going to force appreciate by bringing the rent up. We're going to then in turn refinance the property, pay all of our investors off. We're going to have zero money in the deals. Now, our investors stay in the deal with us. That's what we offer. Our investors get to stay in cash flowing. So now the property turns into an infinity rate of return, cap rate. So we have no money in the deal because we found such a good deal. Now, that's a rarity, right, Chris? That doesn't happen every day.
No, definitely not.
Especially in this market, it doesn't happen every day. But that's what we found, and I found that, all of my deals, my whole portfolio, most of my own personal portfolio outside of Premier, because I have some assets with my partner Danielle outside of Premier, all of my assets, I find deals, man. I know how to find deals. That's what I do. I know how to find deals. So my portfolio, it basically performs at a infinity cap rate because I BRRRR everything. If it doesn't BRRRR, it doesn't work for me. All
now,
right?
with your banking relationship, is that a community bank? What kind of a bank? Is it a small local?
Very good question. So last year, it's a local community bank. So one of the things I teach my students, one of the things I teach my students is you have to have relationships with your local community. You got to find relationships. If you're investing in your community, you got to have relationships with your local community bank. It's the way I was taught. It's the way my mentor was taught me. Let me give you an example of the importance of it. Last year, I did on my personal portfolio, right, outside of Premier, I did 12 we bought small stuff from 2 to 4, 5 units, 12 deals. I had 2 appraisals done because of my relationship with the bank. The bank already knows how, everything was desk review, right? I know how they underwrite the deals. I give them everything they need up front. They know how I run my business. They see my books. They see everything. So it's low risk for them because they know me, right? They know me personally because it's a small bank. The VP of the bank called me yesterday asking me, "Hey, Martin, when you buy an asset, what do you do with your tenants?" He's asking me for advice, the VP of the bank, because he just bought a 10 unit himself. What do you do when you buy a new asset? I was like, listen, we write a letter. My PM writes a letter, and we immediately after we close, we let him know new owners in town. This is what's going to happen. These are the new rules. He was like, "Can you send me a template?" But I share that just to give you an example of the importance of when you have that relationship with a small community bank, right? And that's
I think this whole business is a relationship business. You probably built a relationship with that you said it was an older woman for the purchase.
The purchase.
So you built a relationship with the seller. You solved the seller's problem. You have a relationship with your investors, and that's how you raise the money. And you have a relationship with your community bank, and that's how you exit the private investments.
100%. DLP, you're familiar with DLP, right? DLP, the commercial company, so they do lending. So DLP, I had him on my podcast the other day, actually, one of their guys. They're giving me $1 million line of credit. Again, relationship. And one of the things Nick said to me, he said, "Hey, Martin, we really, really like, because it's bridge lending, right? It's kind of just transactional money. For, hey, you have a property you need to reposition. We'll lend you money for a year, 2 years. And he says, one of the things that we really like about your business model is that we feel really comfortable the fact that you have a relationship, the strong relationship that you have with your banker, that we know you'll be able to pay us back when you say you will, right? Because of my relationship with the bank. So it's extremely important, in my opinion. Just like you, it's all relationship. This whole game is relationship. Having relationships and reputation, man. Competence. So in our business, Chris, there is the saying, money follows good deals, right? Money follows good deals. I think that's an incomplete statement. I think that competence, right? Competence and good deals, then the money comes, but you have to be competent first, right? So you need to be educated. You need to be listening to shows like yours, shows like mine. You need to invest in yourself. They need to read your book. People need to invest in themselves first. Competence, right? So one of the things I like to share with my students is, hey, listen, so people say that money follows good deals. If you had a friend that's got a horrible reputation going from one thing to another thing to another thing to another thing, and he's a drunk or he's just got a bad reputation, right? And he doesn't stick to anything. He doesn't complete anything he starts. And then all of a sudden this guy comes to you and he's like, hey, I have this great, wonderful deal, right? In real estate, are you going to give it to him? Are you going to give him the money? Probably not, right? Because he's got a history. So competence is extremely important. Get competent in this game.
I always tell people, when you're working with private investors or any lenders, hard money banks or anything else, what they're looking at, and a lot of people discount this. They don't think this is important. They're looking at you, your credibility, your relationship, what your history is. Like, what is your experience in this field? They want to know all those. We just wrap it up and sum it up in credibility. So that's the first thing they're looking at. Everybody thinks they're just focusing on the deal. The deal's important, but they care about you. They want to know that if they loan money, that they're going to get their money back, that they're not going to have to chase you. So that's the credibility. Second thing they're looking at is a return on their investment. That's the problem you have to solve for them. You have to solve the problem of making more money for them, which is the return. But lastly, and I think sometimes the one thing that's often misunderstood is the investor, the private lender, also cares about the return of their money. So they might want a return on their money, but they also want a return of their money. So that all flows. There's 3 steps. You got to first have that credibility. Then you got to have that problem solved, which is a return on their money. Lastly, they want a return of their money. So if you don't have an exit strategy clearly defined in your business plan, they're not going to feel comfortable. You might be able to pay them 20% return on their money, but if they're not going to get their money back, what does the 20% mean? It just means that you don't have an exit strategy that made them comfortable. You got to cover those 3 grounds.
100%, Chris. I mean, I had a lender I was talking to, actually same lender I just told you about, right? $1 million line of credit. He tells me, Martin, he's interviewing, he's kind of interviewing me. Like, how long you been, investing? And I'm like, 2007, bought my first duplex in 2007. Didn't know what I was doing. So I was in the mortgage industry, right, Chris? I used to do mortgages. So I bought this property. You remember, those were the Wild Wild West days, right?
Oh gosh, I know so many mortgage brokers from back then. Right? It was just like printing money for those guys.
So I was the broker. So I got this deal. And the challenge was, back then, I see a lot of similarities which was happening now in the market, Chris. So back then, I had this mindset of everyone was buying. Money was free. Money was not free, but it was easy, right? Money was so easy. So everyone was buying, right? We were giving money to everyone. And I was coming from a scarcity mindset. Oh my goodness, there's not going to be enough. When is, I'm going to miss out, fear of missing out. So I went and I bought this. I got this deal, got a great deal, bought it for $275,000. On the purchase, I made $15,000. So I made money on the purchase. But what happened to me, Chris, was I had a lousy business plan. 2 years later, I was underwater. 2 years later, I talked to a realtor. I bought it for $275. They said you can't get more than $189 on this property.
Whoops.
Yeah. So talk about learning the hard way, right? I was playing Mr. Landlord. I was the one that would go. My kids were small at the time. We had a turn and we had college students in there on top of that. So they burned my house down. That house ended up getting burned down. They burned it down. And but I learned the hard way. So I'm talking to Nick, to this lender, and he tells me, Martin, so what were you doing in 2007? Right? So, well, I bought my first property, this and that, and, you know, and he says, I'm just going to let you know, if you were in the business in 2007, we only work with couple of hundred investors nationwide. And we look to see what you were doing in 2007 and if you kept your word. And, you know, I'll share this with you, Chris. In 2007, 2008, 2009, 2010, I had this asset, right? And I was Mr. Property Manager, Mr. Landlord, Mr. Everything, right? Because I didn't have an education. I didn't know what I was doing. I didn't have a system. I didn't have a business. So a couple of years later, I was underwater, and I learned one thing I kept saying to myself, right? One thing I kept saying to myself is, I signed on the dotted line. Everyone else is walking away from their mortgages. Everyone else is easy. Everyone else is saying, I'm underwater, especially here. We're so close to New York. Everyone was migrating back to New York City, right? After the first influx. Everyone was migrating back, and they were just walking. It was happening across the country, across the world. People were just walking away. And I kept saying, I remember saying to myself, nope, integrity. I'm going to keep my word. Nope, it doesn't matter. I'm underwater. I signed for this. I'm keeping my word. And I know why. I just was being true to what I committed to. And today, because of that action, is paying great dividends. Right?
You know, I love that you said that, because I'm trying to think there's so many examples, but you know, there's an old tale of two people. And the one person, you know, had tons of money, and that one person was the person that, you know, would do all these fancy deals, but then when things got bad, just bailed, screwed a lot of people. And you know, from the surface, it always appeared like that person had all the money. Then there was the other person, lived just a normal life, very middle class, struggled, you know, it just didn't look like that person was success. But that person was the person that paid every bill during hard times, never left anyone hanging, always made decisions for others before himself. And there's this whole, and I wish I could remember where the story was. This is when I was young, I heard this. And the story was that guy that appeared very wealthy, that was always screwing everybody, eventually crashed and burned, went bankrupt, lost everything. This person over here went on to be a multimillionaire and continued to be a multimillionaire in some of the hardest times, because he always put other people before himself. He always made sure that his commitments were honored. He always made sure that he never screwed somebody. He always made sure that if he made a commitment, he followed through with it. And no matter what that meant, if that meant going into his pocket, you know what you said, and I can tell story after story of deals we've lost money, even JV deals where I could have made that JV partner sharing those losses, but I made a decision to reach into my pocket, and it hurt. $40,000 was one of them, 34 Wood Lee. Reach in my pocket and make that investor whole and pay that investor interest when I had no obligation to pay that investor anything. Matter of fact, that investor could have shared in the losses, but you know what? I looked at it and I said, this is going to hurt, but this is going to be the one thing that's going to basically be remembered, and is going to make sure that someday later when I need a favor, I can call that person. And even though they're not happy because they didn't get the return they wanted, they got a return, and they're going to remember that, and they're going to basically come back and give me a second chance. That happens. I mean, and if you don't make that decision to be that person, and it's very easy to just, like you said, walk away when times get tough. Oh, this is COVID. Screw you. I'm just gonna walk away. It's very easy to do that, and it might seem like the right decision at the time, but you know what? You'll never know what a reputation, because you know you spend your whole life building your reputation. You can lose it in one bad decision. And if you lose the reputation, you'll never get it back. Or if you do get it back, it'll take the rest of your life to get that reputation back. And all it takes is just one screw up. So you got to be very careful when you think that you're going to make a decision that's going to hurt somebody on making that decision, even if it means that you're the one that's going to get hurt.
100%, Chris. You know, we attribute our success in our business, right, in our practice, in our syndication practice, and in when we do flips, because we use private money for flips, man, is we keep our word, right? That's man. I did a workshop. It's called the Warrior Workshop, and it's a 5-day This company is no longer in business, but I took my youngest son 2 years ago, and a warrior, right? What they teach you is mindset, is how to, a warrior acts in spite of his mood. A warrior does the right thing despite of how it feels to him. It's right. It's right. I committed. I'm going to do it. And one thing that the instructor at this seminar said, he said something that has stuck with me. And I know it's going to stick for the rest of his life with my son. And he said to us, every time a man or a woman say they're going to do something and they don't do it, right? You lose just a little bit of yourself, just a little bit of your spirit you lose. A warrior loses a little bit of himself. And before you know it, if you do that enough times, you've lost your whole life. You've lost who you are as a man, as a person, as a woman, as a human being. So, look, no one's perfect, Chris. No one is perfect. But one thing is, if like you did, right? Listen, I can't make you 100% like what we promised you because life happened. But here's your money back, and here is interest, right? You're doing the right thing.
I'll never forget that deal ever, as long as I live. And that JV person, that JV investor was nasty. They were like, I could have easily just walked away. I had the legal documents. My attorney said, "Why are you giving them interest?" And I said, I don't know, but it just feels right that I give them some interest, even though we lost 40,000, and even though they should have shared in that 40, because they're just a partner, right? They weren't a private investor. They're a partner on the LLC, like all things considered. And I don't know. I had a feeling, and I just felt like, just make them whole. Because up to this point, I'd never had a single investor ever lose money, and this would have been the first. So that would have been that chip of my soul, right there. No one's ever lost money with me, and now here, first person loses money with me. That's just the start, and I didn't want that, so I made them whole. And then, I was talking to my wife. I'm like, we have to pay him 5%. Now, 5%, they were hoping for more like a 15 to 20% return. So 5% was they were not happy about that, but I didn't have to pay them anything. I didn't have to pay them any interest. And 5% that was better than what the banks would make them. It was better than what they'd get anywhere else. And I paid them that. Now, they didn't walk away super happy, but you know what? I've heard through the grapevine, because they're in this area, that they never ever say anything bad about us, that they respect us, that they say nothing but good things. And that right there is worth the 5% I paid them.
Yes, sir.
I paid it forward, and it didn't feel right at the time. It sucked. I lost 40 grand, and here I am writing another check for like 7 grand to make them whole on the interest. It didn't feel good, folks, and it never will. But doing the right thing is just doing the right thing, whether it feels good or it doesn't feel good. It will come back. I don't know. You do the mindset stuff, but I'm just saying, like, sometimes if you just do the right thing like that, it will come back tenfold down the line. Now, that hasn't come back yet, and I don't know if I'd ever call them asking for anything, but just them to go out and say good things about us in a bad situation is worth everything.
It's already come back in that way in your reputation. I'll share a quick story with your listeners. In 2000, going back to 2008, the Great Recession, right? I bought this house in 2009. The world was coming to an end. You remember, Chris?
It was bad. I was a financial advisor at a high level. It was definitely coming to an end.
It was bad. Everyone thought the world was on fire. Main Street felt it. I felt it, man. I literally took my mortgage broker's license and I put it in the garbage can. It winded up in my home, in my garage, in the garbage can. That's how much it was worth. Because, with the regulations, what they did with regulations and all of that, basically put the small guy out of business. That's a whole other topic. But anyways, where I had my office at the time, this is another real estate investor that owns a bunch of assets in the area. This gentleman owned a hotel, and he owned this office building. So we went 2008. I said, Barth, I got to move. I can't stay here. I can't handle it. I lost a bunch of loan officers. I went back to where I started, to a smaller suite. And I couldn't even pay that, man. That's how tough it got. And I signed a year lease with him. It was a small office, man. I can't remember. It was like $400 or $500 a month. It was like a little room, Chris. And I couldn't even pay that, man. That's how bad it got. It was bad out there. If you were around, you remember, Chris. But if your listeners that were around, no, it was tough out there. And I remember going to this man and I said, "Listen, Barth, I'm sorry, man. I just can't do it. Like, I really can't. This is what's happening in the world. Here's your keys, but I'm giving you my word. gave the man my word. I said, listen, Barth, I'm giving you my word that I'm going to come back and I'm going to make good. I'm going to honor my lease, what I owe you. And we left on good terms. He shook my hands. He was like, okay, Martin, I get it. You know, times are tough. And about 6 months later, I show up at his hotel with a check. And I asked his front desk people, you know, for Barth, and he comes out and he sees me and he's in shock. I give him this check and I'm like, man, here's this check. I told you that I was going to come back with this thing. Here it is. And he looked at me like I had two heads. He was like, heads. He said, you know what, Martin, most men would have just said, okay, it's whatever. I said, no, Barth, I told you I was going to make right on this. Here it is, man. And that man told me, he said, Martin, thank you. I honor the fact that you kept your word. He said, if you ever need anything, if you ever need to do business in this town, well, I live in a small town. So, you know, most small towns have their little good old boy network. And he was part of that network. And he says, if you ever need anything in this town, or you need to do any business, any future business, come to me. And I'll tell you how that deed of keeping your word paid forward. Last year, I met a gentleman that was raising capital for a deal, and one of my friends introduced me to another guy. So this guy, he comes into my office and he's like, you know, yeah, I have, you know, whatever, $100,000 he wanted to invest. And we had spent some time together. He had been to one of my events. He was really vetting me. I mean, he came to one of my real estate investors meetups. He came to my office. He you know, at one of my events was talking to my wife, just kind of vetting us. And one day he's in my office and he's like, you know, he goes to the synagogue, local synagogue. I said, oh, so you know this guy, that guy, this particular guy was one of them. He goes, yeah, we're good friends. I said, you know, if you really want to know anything about me, just talk to that guy. If you really want to know, you know, who we are and our level of integrity. And he came back and he said, you know, that gentleman had nothing but stellar things to say about you. Because of that act that I kept my word, got me $100,000 10 years later.
Yeah, goes a long way.
As an investment, so doing the right thing and keeping your word always pays. Right? So it's all tied together. And again, like I said, man, I'm not going to lose myself. And if I can't do something, I'm going to say, man, I can't do it.
It's always better to do that.
I can't do it. But, you know, it all starts with a mindset, Chris, right? Is it okay if I share a quick story with
Yeah, we're getting to the end, but yeah, if it's quick.
I'll leave them with this story, right? So this is a parable of two shoe salesmen, right? And there's these two shoe salesmen, and they go to these two shoe salesmen work for two different companies, and I want you guys to picture this. These two guys are sent to this remote island to sell shoes, right? And the island is so remote that they have to get on a plane, on a boat, and to get to this island. They finally get to this island, and they notice something. They notice that no one on the island is wearing shoes. No one on the island is wearing shoes. And the one guy, he gets this feeling. And the other guy also gets a feeling. So they walk upstairs, they go to the hotel, they go to their rooms. The first guy, he picks up the phone and he calls his boss, and he's like, boss, you know, no one on this island is wearing shoes. Send me on this first flight back home. I'm out of here, right? And he hangs up on his boss. The other guy in the room next door, he picks up the phone and he calls his boss, and he's like, hey, boss, can you believe no one on this island is wearing any shoes? Send me 10,000 pairs of shoes because I'm going to put shoes on everyone's feet in this island. And there goes the story, right? The point of the story that it's all in the perspective how we see things, right? You and I were talking about mindset. We were talking about earlier about what's to come with what's really happening in our economy, right? What the opportunities are about to come. And some people can see, you and I see it as opportunity. You told me some of the strategies you're doing, you're selling a lot of your stuff. And I see it an opportunity, but others may see it as a challenge. And that's a choice, right? You find what you seek. right? If you seek, you shall find, says the great book, right?
I like
So
that.
you find what you look for. So if you are going to be focused on what the media is telling us, the media is full of crap, right? What the media is telling us and fear mongering, then that's what you're going to find if you focus on that. Where your focus goes, your energy flows and results show. But if you focus on the opportunities, if you focus on looking for the opportunities, there's opportunities all around you, all around you. You know, most of your listeners probably know Grant Cardone. Grant Cardone said something, I heard him in a podcast or somewhere. He says, you know, when I was broke, because you know Grant Cardone is flamboyant and stuff. He's like, when I was broke, I would always be driving down the street, and he would train his mind to look for opportunities. And I thought that was so cool. I thought that was really interesting because it is a mindset training. It is a training. So, hey, where's my opportunity, right? Where's my opportunity? A lot of people they go through challenges in life and they call them problems. And instead of calling them problems, maybe they're just a challenge and they're a growth opportunity. And what's my lesson, right? What did I learn here? How can I get better? How can I identify this sooner next time? As investors, you know, we better learn that quickly, right?
Yeah, real quick.
You better learn that quickly. But anyways, I wanted to share that with your listeners to look for the opportunities in everything in life. Just look for the opportunity. In real estate, look for the opportunities. There's going to be some challenges ahead because what goes up must come down, baby. That's for sure. And I see, like I said earlier, I see a lot of similarities in the market right now, and you probably do too, and compared to what was happening in
2007 and 6.
Like
2006 and 7. Like it's too much like that right now, which is scaring me because for a while I've been saying this is not going to look like 2008, but you know what? There's too many similarities.
Yes.
And I think it's going to be a mix of early 2000s.com and the prolonged recession, along with some of the major fallout impacts of what happened in 2008. And that right there, that's a disaster. But it's also a massive opportunity for those that don't look at this as an obstacle. They look at it as an opportunity. So are you going to be the light in the darkness, or are you going to bury your head in the sand? That's the question you got to ask yourself, folks. So in the closing, Martin, how would they go about learning more about what you do with your consulting, with the mindset stuff, and with your syndication?
So a couple of things. So I have a podcast too. You guys can check out my podcast. Is Latinos in Real Estate Investing podcast. I also have I host a local real estate investors meetup, which we're actually doing that live and virtually. We're transitioning into do it. So it's worldwide. You can check out our website at stroudsburg.com, and you'll just check the events and you can just register if you want to see our live events. And then you can check out our syndication business, which is premierridgecapital.com. And you want to just learn more information on how to invest with us, you can go there and check that out. And coaching, consulting, you can just go to any of those sites. You can reach me, right? So I also have an online course, and I can give you the link for that, and that's Unteachable.
Awesome.
It's a long thing, but I'll send you the link for that, Chris. You can put it on.
Yeah, we'll put it up in the notes so you guys can find all of what he's doing, from mindset to syndication to real estate education, coaching, mentorship, and all that good stuff. But back to what we talked about earlier, for all of you seeking and on your journey to being a rebel banker, you have to take action. You have to change your mindset. You have to see the things you want to see before they appear in your life. You actually have to do what Napoleon Hill said. You have to believe it, you have to dream it, and then you can achieve it. Not in those exact order, but that's what he said. And you know what? My whole life, everything I've accomplished, I dreamed first. Then I believed that I could do it, and then it all happens. And it doesn't come easy, and it's not going to happen overnight, but that's the power of taking action, folks. So go out there, take action, and live your perfect day. That's your goal. You got to know where you're going, and then you'll know how to get there. So thanks for joining us for another episode of the Real Estate Money School. Thanks, and we'll see you on the next episode.